Well, let's turn to the big fix. There are two parts. We can either talk about the banks or we can talk about the fiscal stimulus. Let's do the stimulus first. So what do you guys think of the stimulus? Too much, not enough, just right?
My view of it is you need it because we have a very sharp fall in private aggregate demand. If there is not an increase in government spending, then the economic contraction becomes more severe than otherwise. Of course, in terms of the composition, my view of it is the part that is tax cuts is not going to make much of a difference. Where the tax cut last year, most of it was saved because people are so worried about jobs, about running down their credit cards and mortgages, so that's going to be leaking out. And I feel also a lot of infrastructure spending is going to take a long time. There are very few projects that are shovel ready. So the overall impact of the stimulus might be smaller than the kind of like a headline $800 billion number. And the other concern I have about the fiscal stimulus is on one side we need it, but it's not a free lunch. We'll have to finance it. You know, even without the stimulus, this year would have a budget deficit of 1.2. With the stimulus, for 800 over 2 years, another 400, 1.6. You add the unquote additional resources for the financial system, you get financing needs of $2 trillion for the U.S. government. A good chunk of it might be monetized by the Fed, but still you have to go and borrow. And borrow in a world in which everybody else, even our creditors now, are running a budget deficits, even Russia, China, the Gulf states, Europe, Japan. So I worry that at this point, there's a massive increase in the supply of new bonds in the market, this tsunami coming up, might push up interest rates and crowd out the economic recovery. So certainly in the long run, the massive increase in the public debt will have to be somehow financed. Either we raise taxes or cut spending, or the other two options are default or inflation, and neither one is a great one. So let's not kid each other. We need the fiscal stimulus, but the cost of it will be massive down the line.
Is this, I mean, given the political realities, is this kind of what you...
Better than nothing.
Right.
But I think you have to look at everything that they're doing, and the question is, what else is it? If it is just the fiscal stimulus, it truly is worse than nothing. It's like giving a blood transfusion to someone who's hemorrhaging without taking care of why they're bleeding. The banking system is why the system's bleeding. If they're not going to come in with a plan to fix the banks, this is not a good year to do the fiscal stimulus. The fiscal stimulus boosts the economy temporarily. I mean, there's some good longer things in infrastructure and such they're doing, but a good part of it's a temporary boost to the economy. It holds up asset prices. It holds up demand. Makes it easier to fix the banking system if you're going to fix the banking system. But if you're not, they should wait. So they need the fiscal stimulus. They need to fix the banking system. They need to do something about housing, I think. And Secretary Geithner said they would, but didn't say what they would. And then probably monetary policy, I believe, is a crucial part of this. I think there's no way to escape having some inflation as actually part of the solution to this, in order basically to inflate away some of the debt, and also to reduce the value of the whole debts in the system. They don't seem to have that on their mind, by the way. But I think you have to look at the whole picture, and you need to.
It's hard. I mean, normally they would.
Right. Normally,
they don't go out and say, we want to create.
They congratulate themselves, for not. But this is a once in 50 years, 100 years event, when actually inflation, significant inflation would be a good thing.
And just one thing to say on this, I agree with both Ken and Nouriel, is that this is a simplistic way of saying it, but until a few months ago, it was a financial system dragging the economy down. Now it's sort of the economy dragging the financial system down, or a better way of saying it, there's a negative dynamic going on. So you have to deal with both of them very decisively, because I agree with Ken, without the fiscal stimulus, certainly the banking crisis will get worse, but without fixing the banking problem, then the fiscal stimulus isn't going to go very far. So I agree with that.
Just one point on inflation. I mean, Ken might be right that eventually the solution might be inflation, in part because, of course, inflation might be the path of least resistance. If you have to have this huge increase in public debt and then go to Congress and ask for tax increases, that's going to be politically hard for anybody, while telling the Fed, print money non-stop until we create inflation, we wipe out the real value of the debt. We create the seniorage tax is a easier way politically to do. But again, let's not think that that's going to be easy, because if the inflation genie were to get out of the bottle and say expect inflation goes from low single digits to high single digits, let alone double digits, and inflation goes higher as a way to wipe out this debt, then eventually down the line we'll need another Volcker-style nasty recessionary disinflation to bring back that inflation expectation genie into the bottle, and that's going to be problematic. And as soon as expected inflation is going to go up, the interest rates on variable rate kind of assets is also going to go up. You know, you can reduce the real value of nominal debt at fixed interest rates, but a lot of the liability in the United States are variable rates, variable rate mortgages, deposits, the short-term debt of the government, of the corporate sector, of the households, of the banks. So if you expect inflation goes up, then you'll have the readjustment of those things, and then you get really big inflation to wipe out the debt. So maybe the path of less resistance is going to end up ugly if we follow that path, right?
Well,
I agree.
So let's go to the tough question, the N word, nationalization, banks. What is the heart of the problem in the banking system that needs to be solved, and how do you do it, and what do you call it?
Right.
Ken.
I mean, I think most of the major financial institutions in the United States are deeply insolvent, and they're not going to be, performing normally in any way until they are. I know the executives testified in Congress that they're fine and they have a lot of capital, but give us $1 trillion just in case. I mean, that was yesterday. I mean, it's truly, it's clear that if they go look at the books, we're going into 2009, it's a whole year to go of this deep, difficult recession where it's not just subprime and near prime and whatever, but all the other loans which Nouriel listed are going to be defaulting, higher default rates, one after the other. They don't have any cushion. They don't have any capital. It's a very, very big hole to fill. And there needs to be a bankruptcy is what there needs to be. But because it's the banking system, it needs to be accelerated, controlled. There are various ways to do it. And when people speak of nationalization, what we mean is receivership during a period of cleaning it out and reprivatizing it. There really hasn't been any country of the dozens that have gone through this that have done it another way. I have seen some very cute ideas of how to skip that phase, whether it's 3 months or 6 months. There's some clever bankruptcy plans floating around.
Bad bank, good bank.
The bad bank, good bank's a variation of the nationalization. You nationalize it, you strip out the bad assets into the bad bank, which you just sell off. You then recapitalize it using taxpayer money, and then you resell it. And importantly, the bond, not the depositors you pay, but the bondholders lose in this. And that's a way to go from a bad private bank overall to a good private bank overall. That's the idea. And there are some quite clever ideas floating around of how to do it, maybe with a few legal changes, without having the nationalization phase. But it's basically how do you put these institutions into receivership and pull them out the other end. And that's why I talk about 2010. We're just not going to have normal credit markets if we don't get the core of our banking system
So do you
healthy.
think that if